the new normal is just volatility. It does feel that way, doesn't it?
Last week, 25,000 mortgages were repriced. So that's more than the mini budget.
So getting stuck on the market really isn't an option.
Most vendors are probably more optimistic about the sale of their own home, but very different about when they go and purchase somebody else's home.
Staging isn't just about fluffing cushions, making sure that the flow of the house is right, that the rooms all have a clearly defined purpose, which people buy first with emotion.
And justify with the logic and the price. And
we see so many agents help a client by reducing their price, and they'll take a big, huge six-figure sum off before they've even looked at staging, which costs a fraction of it. A good agent is an advisor. An advisor knows a little about a lot, and if they don't know any more, they know who does. People buy from people, not brand anymore. You've got to define what good looks like, follow that religiously, and say no to more stuff you say yes to.
welcome to Estate Agent Showdown with me, Matt Giggs. I'm live, not really, because this is a podcast, but I'm live with Steve Eakins and Elaine Penhaul. Elaine is from Lemon and Lime Interior.
Yep.
And I've met you before, so we'll dive into how you've been for the last 2 or 3 years since I last really bumped into you properly. And Steve Eakins is the kind host here at Lumen. Is it Lumen Group? It's Lumen Currency Exchange.
Lumen Pay is the company name, but most people know it as just Lumen.
I'm really good at prep, as you can tell.
Well rehearsed.
Well rehearsed. We
Well
like to dive into a natural conversation today. And we're going to talk about a few different subjects, more industry related, going around the market, looking at the noise that's going on at the moment, or maybe even the volatility that's around us right now and how uncertainty and certainty are challenging the more premium end of the market. I'd like to dive into that. And on that subject, actually, you've both been at a conference, a premium market conference with Fine and Country over the weekend or the back end of last week. Was it good?
Yeah, it was good. Yeah,
Not going to say it's crap, are they? Let's be honest.
No,
lots
it was
of
a good
good
day.
fun.
Lots of
Not
really
now
good,
with press record, but was it insightful?
Yes. And I think what we always find at that conference, and we've been there for probably 10 years now, is that we get a really good gauge of what's going on in the market with all the agents that we talk to. And because people are coming from all over the country, but all in the prime market, it's a really good barometer of what's going on.
Well, they're one of the most established franchisey kind of brands, licensed brands across the UK. So it must be a really good spread of opinions, different ups and downs, different challenges. What would you say It's always interesting when you get two people that go to the same conference.
Let's see if we heard the same things,
Let's see.
But no, to your point, it's always fantastic to get a wide breadth of knowledge through the whole of the UK rather than just the media outlet of fear around what's really happening. We are recording this at the beginning of the spring boom of property market. So the agent theme was they're all optimistic, hopeful. They're bringing lots of property to market, lots of more listings coming to market. We've only recently, the rain has stopped going sideways and the grass has been cut and the photos are being done, which you're actively involved in a lot more. So lots of new property coming to market. The interesting thing from years gone by, I think that I saw is the difference from the buyer profile. And by that, we've even mentioned before we press record, historically years gone by, you'd see the buyers come to look at a property without even put their property on the market. Whereas now they're really seeing a lot more vendors than they're seeing buyers, but the buyers that are coming are already chain established. So they're more active buyers that are moving forward and taking the pick.
Some good stuff to unpack there, actually. What were your observations of the conference? What were your takeaways, if you like?
I think what was interesting from my point of view, and I talked to both the domestic agents and the international agents, and everybody is being impacted by what's going on in the Middle East at the moment. Everybody is seeing the markets being impacted. As Steve says, quite a lot of people still listing, and not so many buyers around. So certainly not a typical spring market. I don't think I spoke to anybody who thought it was a typical spring market right now.
Saying that it's difficult to have a typical one after the last 8-10 years. There's no normal. We went into this year hoping that would be a normal one, and we've had this kick off.
We were talking about post-Brexit, really. The new normal is just volatility.
Yeah.
It does feel that way, doesn't it? So I think in some ways, I hate to say it's a good thing because it's not, but when I was working in the industry maybe 10 plus years ago, I've been in it for 30 years, it felt like every 10 years something major would go on. And it would have quite a big impact, you know. And even the elections used to have quite a big impact. These days, not so much, because I just think there's just constant noise and news.
What I'd say on that is there's less emotional buyers that fancy it in the nicest of ways. Those ones that did fancy it have already transacted semi-recently. So the ones that are the buyers at the moment are more for necessity rather than emotionally driven, unless they are top of market or unless the international and the US buyers coming in, which we see doing what we do. They're the more active emotional ones.
Do you see, I mean, obviously you're in the industry, but you're not in an agency as such. So you're not, you know, boots on the ground in that respect. But your observations are really important actually for this particular show, because you've got a keen interest that goes on because it's directly linked to what you guys offer and what you guys do. And we'll touch on some of that. But Steve just said something about the weather, which just made me smile inside, because the weather's been pretty crap for a while. And even now we're sort of hoping for some sun. How does that affect what you do when it comes to presentation, staging, making the property look at its best to get the premium price?
I think what we notice is when we have a long winter or a very late spring, as we've had this year, you know, we've only had a few days of sunshine and now it's gone back again, that people are slow then to come to market, because a lot of people, and we work primarily outside London in the country house market, many of the homes that we are involved with have beautiful, beautiful gardens, and people don't want to list them until the gardens look at their best. And if spring is late, then that will be probably a month later they'll be thinking about listing than they would otherwise do. So it just pushes everything a bit further down the road from our point of view.
Yeah. And what about, you know, from that perspective, I suppose, does it create a bit of a bottleneck, I suppose, in terms of new listings coming on? Once that creates more competition, it's probably one for the agents, really. But it is interesting when you think about it. And coming back to pricing, because obviously there's quite a lot around pricing at the moment, whether the prices are going up or down. I mean, I'm asked all the time by people that I know, what's the market like? I think they're really hoping for me to say it's absolutely awful. It isn't, but correct pricing is essential. Now, if you go back over the last year, 18 months, or maybe 2 years, certainly since the mini budget, pricing's been really, really critical in that higher end of the market. But you're seeing 10, 15% coming off of asking prices, original asking prices. How does staging and presentation bridge that gap? What's your overall kind of viewpoint on that? And have you got any examples which are worth just touching on?
Yes, so I think pricing is absolutely critical, and we're fortunate enough to work with a lot of very good agents who don't overprice in the hope of winning the instruction from the client, but who'll be prepared to have a really, so in some cases, quite a difficult conversation with a client that says, right, we're going to price it right to start with, and we're going to get the presentation right, and we're going to get the promotion right, and then we'll be able to achieve a sale. And what we do notice is that where all those things are aligned, so those three things are aligned and the sale happens, it's a way of mitigating risk for the seller, because we know if something's stuck on the market, then there are a lot of costs associated with that. It might be mortgage, it might be utilities. A lot of the homes that we deal with are on oil central heating, for example. Oil has gone up. Well, my own, you know, I had a tank of oil which was 3 times the price last week as it had been before Christmas. So, you know, all of those prices are going up. So getting stuck on the market really isn't an option right now. And so the staging then is the thing that when there's a lot of stock coming on, that bottleneck, you know, lots of people are starting to list now because gardens are getting better. It's about that house that's been staged, that the presentation has been considered alongside the pricing, that then jumps out and somebody looks at first. Well, you know, if you get the buyer to look first at yours, because it looks amazing, and then they walk in and it feels right, the flow of it's right, because staging isn't just about fluffing cushions, as we know. You know, it's making sure that the flow of the house is right, that the rooms all have a clearly defined purpose, which a lot of the bigger houses don't necessarily, because they've kind of evolved around a particular family. They've got a clearly defined purpose, and people can look at it, the whole thing makes sense, then they don't bother looking at anything else. So that's where we're seeing real importance of what we do right now, of just mitigating that risk of getting stuck and then having the price drop. Which, as we know from the right
quite significant when you're in in those thresholds. Let's say over £1 million, your 250 thresholds, 250,000 thresholds. You're normally having to hit those pricing points. So if you're at one, going down to the other's a huge drop. When you could just invest, I don't know, 20, 30, 40, 50,000 pounds in the way the home feels, because people do buy with emotion, don't they?
I think people buy first with emotion.
And justify with the logic and the price.
And then justify with the logic. For most people, I mean, clearly there are groups of people that don't do that, investors being the most notable one of those. But investors are going to go in and look for a low ball offer anyway.
Yeah, and they're probably lower in the markets, rather price, I would say, more so than the higher.
Most families are buying on emotion to start with, and then, as you say, justifying with logic. And we're capturing that emotional buyer first.
Yeah, and you've seen the stats, I take it, about if you reduce your house price and the likelihood of it selling is reduced again, and the likelihood of it actually completing is reduced even further. It's quite interesting that I think agents, the ones that I work with, where I think agents maybe get stuck is they'll sit with someone like yourself, Steve, and start telling people not to overprice the house.
Right.
When most vendors are probably more optimistic about the sale of their own home, but very different about when they go and purchase somebody else's homes. They don't wake up on a Saturday morning as a buyer thinking, do you know what? I'm just going to see Lauren's home today and I'm going to pay her the price that she would like for this house. You know, it's almost about making sure that sellers are educated on the two outcomes. Outcome one, overpricing. Let's just talk through it. Let's talk through the consequences of that currently. And then option two, correct or event pricing, whichever way you want to present it, using the tools that you've just talked about, and how actually finding the right buyer dictates you achieving the right price, ultimately. Because it is about that, isn't it? And the one form presentation is not just about when they arrive, it's about before they arrive. Is that fair to say?
Absolutely.
Like the videos
absolutely.
and
It's
the attraction.
It's getting everything right from the moment somebody thinks about putting their home on the market. It's having that conversation that says, right, okay, so now we need to get the dressing room. We need to put that back as the third bedroom or the fifth bedroom or whatever it is. And the room that your kids have used for the Scalextrics or, as a playroom for a long time. Well, we need to make that into a study because that's what people are looking for in this particular area. So we'll profile the buyer in that area, in that price bracket for the property, and then we'll consider what that particular property should be looking like before we stage, and then making sure that every single piece of comms that goes out, whether it's the coming soon video, whether it's the first set of photos, whether it's the full video tour, all speak to that particular buyer.
I think there's some gold for the agents in this top end of the market. We're going to talk money again in a minute, Steve, so you don't need to worry.
No, this is all. I'm always learning, right? This conversation comes up.
Got to talk money. We're in your bloody offices, so we can't not. But no, in all seriousness, I think the agents I think they're more focused on speed to market rather than speed of sale,
rather than time on market.
Yeah, so it's like I want to get it on the market. It's like, well, that's the worst thing you can do. You just mentioned the profiling of a buyer. So it touches on what we were saying about find the right buyer and you'll find the right price. You've done a book around this sort of subject, haven't you?
Yeah, so I've written 2 books. The first one, Sell High, Sell Fast, was essentially helps a seller to look at their own house dispassionately and say, what do I need to do to get the best sale? And it gives a lot of top tips on what they should be doing themselves. The second book, which came out in 2024 now, I interviewed agents, I interviewed just a lot of property professionals involved in various parts of the way properties are bought and sold, and found a lot of differing views as to what really makes that property sale happen. So we talked about, for example, the pricing triangle, where you can list high and sit and hope, risk the getting stuck, where you can price realistically and hope for a buyer, or you can price slightly under, but you've got an agent then that's going to drive open weekends, and get the competition going, and and how that aligns with presentation and so on. So yeah, I've written 2 books and done a lot of research around this to make sure that everybody we work with, everybody we touch, we're not only fluffing cushions, the kind of the traditional view of staging property where we might be just going into empty
some people think, I could do that myself.
Yeah, and lots of people say to me, well, I can do that myself. Okay, off you go. We're very, very data driven. I'm a mathematician by background, so we're very, very data driven, right from that bit where we use Experian data, for example, to profile the buyer in that postcode from before we even start, and then we're looking at all the trends, all the, what is somebody going to buy? Because it's not just let's make it look lovely and somebody will come and buy it.
There's a lot of science behind. This is why data companies are worth so much money.
That's right.
Because they've got the predictions, haven't they? It's all of the certainty, all of the predictions, and that's what they're selling further down the line. So I think that's a really interesting point. What's the name of the second book, just so I copied that?
How to Sell Your House.
There you go. So if agents are listening, they would find that on Amazon.
They'll find it. Yeah, it's on Amazon. Yeah, it's listed on Amazon, yeah.
Well, I think agents do need to look at this more and more as we become more trusted advisors rather than an estate agent that does one thing really well. Most probably could learn that one thing even better, because I think sometimes in changing markets, 30 years in the industry, I would say 4 or 5 of those years out of 30 have probably seen a declining price market, which means most aren't equipped for the conversations that we need to be having today and to do the things that we know we should be advising at the front end. Just on the money side, Steve, you're a mathematician.
I was going to say one point on the staging piece that I love as well from an agent's perspective is we see so many agents would help a client by reducing their price, and they'll take a big, huge 6-figure sum off perhaps a property.
6 figures in that price range.
Before they've even looked at staging, which costs a fraction of it. So a drum home for agents that haven't come across the service, it's well worth considering that before going down, it's a price point only. Getting a consultation and talking staging can be super useful to help educate and stand out a bit.
It's just, I think for a lot, I don't know about you, Elaine, you deal with a lot of agents. Does it feel like the more experienced agents they're not conditioned to think that way, and it's maybe slightly newer agents coming into the market who are looking at all of the assets that are available to them, the partnerships, and thinking, I'm here to advise rather than I'm here to just list and sell.
Yeah, and it's a mix as to whether it's newer agents or older or more experienced agents, but it is them beginning to understand that the world's evolved around them. And what a seller is looking for is an advisor who's going to help maximise the price for the house. And so, because, for all of us, that house is generally the financial gateway to the next phase of life. And it's wanting that trusted advisor that can get you from A to B with the least hassle, the least risk, the least stress. It's a very, very stressful thing to do, to move house, as we know. Often it's coupled with another stressful life event. So divorce, relocation, which means that the kids are being taken out of their school that they're settled in into a different school. It might be around a bereavement. So having that trusted advisor who can help you at every single stage to maximise that, and not just necessarily maximise the speed or the offer value, but to maximise the efficiency of the process, to make sure it happens without just adding another layer of the emotional stress.
Yeah, that's really interesting. I think certainly in the more premium, and certainly when you're going beyond the prime market, you're in the sort of super prime. The agents at the top are almost like the conduit of everything. They have the black book for the client to access, and I think that's a really interesting point as well. Steve, on a global sort of market side, I was interested. I mean, we touched on this when I met here last time about volatility and the fluctuations in exchange rates and global. Well, it is economic uncertainty. Let's not dress it up. Really impact the UK premium property buyers, or is it still just a bit too much noise?
No, it's impacting everything
from
the latest events with Iran. Iran, basically everyone talks about the oil impact for inflation. Initially, there was a big educational gap around, well, the UK doesn't have a dependency on oil from that part of the world. It won't impact us. But we all buy from the open market. So surprise, surprise, it impacts everybody. Like the oil delivery that you had recently, that goes into inflation, growth forecasts and interest rate change. So what we talked about last time, which did come into fact, right? Next month, we're now incredibly likely that we're going to see the Bank of England increase rates.
Which it was only going to look at
decreasing,
wasn't
going
it?
back 3-4 weeks ago, there was an 80% chance that we're going to cut interest rates.
Yeah.
Now there's over an 80% chance it's going to go up. And we've seen that in the mortgage market. So what was it
lenders
last
have been
week?
Pulling rates, increasing rates.
Last week, 25,000 mortgages were repriced. 25,000. So that's more than the mini budget. A huge impact. So that will impact the bottom of the market hugely, obviously, first. So condolences to those agents having those difficult conversations with the first buyers that aren't going onto the property market.
Yeah.
And that will go all the way up through. And then it impacts debt levels and confidence at the top. So it'll have a wider view. And we're just hoping we'll see a few different outcomes on what it looks like. Either Iranian oil is in the market and we're all having a heyday and oil's at $40, $45 a barrel, or it's a bigger problem. It goes to 140, 150, and it's the R word comes in globally, which I don't even want to say yet because I'm not trying to fearmonger. It's just one of those realistic outcomes that might happen.
You say condolences to the agents having those difficult conversations. You see, I think when you've got the information and you've educated yourself on the information and you're able to have a viewpoint that's not, it's difficult sometimes to be accurate on the future because things can change in a heartbeat. Yep. Probably mainly down to the president of the...
lots are changing. So when you talk about the agents and advisors, and to the point prior, it's not young agents or old agents, it's those agents that learn new things. A good agent is an advisor knows a little about a lot, and if they don't know anymore, they know who does,
to go
and
to.
They speak to that and get that information. So
but I liken it to like being a business owner, and Elaine, you probably both would resonate. I mean, you've got 140 people in this building, not all here today, fortunately, but you have to find the right people to sit in the right seats, don't you? And I think if you're a trusted advisor, actually the specialists around me are really important partners.
Correct.
Okay.
So the partners that we're working with are we're the people behind the successful agent. Like if a successful agent that's taking market share and not just listing with overpriced property that doesn't sell, which has the transactional volume, they're the people that have us in their phones. And bring us out and speak to clients and recognise that ask that extra question to identify what service they can offer to make that happen and to be memorable. You know, your reputation is built in the room you're not in, so it's having those conversations.
Yeah, I love that. Let's just give me an example of a recent agent that you've been working with as a bit of a success story in terms of, you know, an agent's thinking, yeah, I could do with adding Steve into my partnerships.
There's loads that jump out. Like we've had nearly 30 agents make their very first referral to us this month.
Wow.
Which is really happy and proud with that people are seeing that. So it is a growing theme. So those listening going, why is there a currency guy here? What is it? You might come across this more often than you think, to be honest, just asking that question. So if you're not, you're missing out.
So that question.
Which one? As in, what is the question? Okay. Well, when I speak to agents, the two big assumptions they have is, first off, this is a London thing. You know, you're a finance bro, Steve. It's a London thing. It won't be us. I do more in Wales than I do in London. Right? So there's your first one. The second one is people go, great, I know what you do now. I'll let you know when I get my next Chinese inquiry, which I go, okay, yes, please. But actually, 4 out of 5 of the inquiries we get are the vendors. Yeah. So people forget that bit all the time. So more often than not, I go and speak to an agent, get introduced to speak at an event or to have a conversation with people, and I'll get them to go through their pipeline and go, oh, that's a French name. Oh, yeah, they're going to France. Oh, great. Okay, let's go through it. And we'll find 3 or 4 clients in their pipeline now that they didn't even know was internationally exposed. But stories-wise, there are loads of stories from both a buyer and a seller perspective that can make a really big, meaningful difference. Some of these we've spoken about before, but might be worth highlighting. So buyers, we did one earlier on this year when the buyer and seller were off by 0.5%. The agent, you can probably relate to this, was getting a bit frustrated. 0.5%, come on, let's go. But they recognised that the buyer saw he was bringing money in from Europe, introduced us. On that first phone call, we were able to increase their budget by 1.5%. Next phone call to the agent, deal agreed. And that's just by us providing a better price than their bank. Never mind any of the shiny stuff we do, just the transactional saving.
Oh, so interesting. I think, again, it keeps linking back to the agent having the toolbox. Because a third party can have that conversation without the agent saying you must accept the offer. It's actually it's a powerful way of putting a deal together, not because you want to get the deal, it's actually get the right decision made. We were talking about one of your deals that you personally done. Sometimes it's just getting the deal done because it suits you.
It's putting the team around the client to make the deal happen. That's what we've talked about, isn't it? Right? So they'll tell us stuff that they won't tell the agent, like for yourselves, right? The client will often tell us how much they can spend, not how much they want to spend. Pretty useful. Where are the funds coming from, how they're funding it, what's going on to make a deal happen. But all the volatility point, there is that point that's making and breaking deals for agents that we're engaging with at the moment when we've been brought in too late and can't pull a rabbit out of the hat and the market's moved and X doesn't equal X anymore and there's tears, and there's others that have ended up, wow, sizable more money and the house has got another bedroom as a result. It's a big, meaningful budget impact.
I think the first thing because I think a lot of people hear the story about many millionaires and billionaires leaving our wonderful shores for various different reasons, saving money. Are they the kind of people that it's not just exclusive to them? It's more people that are around the whole market.
Correct. Like our business is 25 years old, and we've grown up basically supporting a place in the sun clients, the second homeowners, the ones that want a place in the sun, right? So we're pretty big across Europe to a point that you'll see us on billboards and see us on buses and hear us on the radio and see us in the papers. But in the UK, not a lot of agents know us. And I do respectively kind of say to them, I'm kind of like property staging was 5 years ago. And now you should be doing it or you are doing it. I'm like that. And if you miss it, you're really missing out from that. But yeah, it's those clients that are moving. Lots more people are leaving as a result. But it's the normal amount that are leaving. These are retirees. These are downsizers that want a place in the sun and can get a bit more for their money abroad because they're in that retirement bracket. Our average client age is about 61. So it's normally in that kind of phase of life, if it helps. But there's also the buyers. So we're helping.
How old did you say? 61?
61.
I'm not far off.
Oh, well, you know where I am. Where do you want to go?
Give me another 10 years. This isn't necessarily something. I'm just asking for your opinion on this one.
Yep.
As you're not an agent, but from what you see from the being around it, are most agents undercharging or overvaluing themselves for what they deliver?
Oh, this is an interesting one. We do loads of work across Europe, and agents in the UK are gobsmacked at the average fees across Europe. And once they get through that, they recognise, hang on a minute, maybe I can charge a little bit more. So in Spain, it's 4 or 5%. In Portugal, it's 6%. So there is a big difference, and there's more services around that. So most agents, again, those successful agents, they're getting the property sold. They're not just listing the property, and they're having that price point conversation around, yes, I'm not the guy on the high street that's going to do it for $750 plus VAT and put it on a portal and pray. We will negotiate for you. And even though you're paying me more, I'm providing a lot more service and you will have a net gain as a result. So them actually educating the client on that price point is the difference.
Yeah, I don't think in the UK that agents can expect to put their fees up unless they're delivering the service. And so are they too cheap? The ones that are listing a property on a portal and praying are too expensive. Whatever they're charging, they're too expensive because they're not getting sales. But the ones who are actually offering a service at whatever price point they are in the market and getting a property sold, then they're worth more than that because they're actually managing to get more for the property by doing the job properly.
Yeah, I find it fascinating, the fees conversation, and there's a little bit more coming into the middle or lower market where I think it's Ian Preston's been, do you know Ian Preston?
Yeah.
He's been talking a lot about flexi fees. So, if you want a no sale, no fee, it's here, which is the highest amount. If you want the lowest fee, pay it all up front.
That's just sales. Pick one of three options.
There you go.
And you're taking one of them rather than here's my price and I don't want it.
But I think this is why this kind of market's a really good market to be in, because it is value based.
Yes. In the tricky market, you'll grow if you're doing something different. The same analogy, isn't it? How can you expect a different output if you're doing the same thing in?
And you're seeing obviously the rise of self-employed estate agents on a self-employed model. And I see some horror stories. I also see some real positives. It tends to be on LinkedIn.
Weird that.
Yeah. Yeah, the real stuff doesn't go on LinkedIn, does it? No. Well, we'll touch on some real stuff in a minute, just in case. But running a business is hard work. And whether you're leading somebody else's business or running a business or you've started a business, it feels, this is my own personal viewpoint, it feels like it's never been more challenging.
Yeah, I think that's true.
If it helps, I believe that we do more with self-employed agents or around that brokerage model than more kind of high street brands. And the reason why we see that is because they're willing to learn something new and try something new. And equally, they're more, they want to add more service and more value to be able to take the listings and be successful. Yeah. And equally, when we talk to those self-employed broker models, we educate them around the cliff edge. A lot of them, they sell a story around the support they have, all good for them, but they are recruiters. They're recruiting new agent growth as well as that, and they focus on recruitment, not necessarily retention. So when we look at agents, we'll often see a cliff edge of about 7 months. Yeah. If an agent hasn't had a win in that period, they'll de-engage or return or leave or whatever it might very well be. So when you add these other services and other values, as well as all those other benefits that we talk about, there is a commercial benefit to help people support. So there will be agents that are new to self-employed model who will earn from us before they earn selling a property.
Yeah,
which is quite supportive, right? That's really useful to grow that business.
Yeah, that's why I wanted to kind of ask, because there are different avenues with flexi fees and what you're talking about. Because when you're listing a house and you're working for the corporate agent, for argument's sake, you are probably being driven by targets. When you're doing it for yourself, there's a different motive there. Success. There, and reputational success as well. Going back to the business side of things, and I'm really interested just to kind of go into that a bit more, because I think it's okay LinkedIn telling everybody how great the world is, and you flick onto Instagram, and maybe there aren't so many Dubai real estate agents posting how fantastic it is at the moment. However, that I still think lifestyle and things like that are quite attractive to a lot of people. What are you seeing as the challenges personally running your business, Elaine? What's the bit that you're going, I just can't catch a break?
I think right now, and I've run businesses all my life, which is quite a long time now, in various sectors. And what I'm seeing right now, and bear in mind that, I've been running businesses through other challenging times. I started this business, although not officially, post-divorce, and I had some property which I had to learn to manage as part of that in 2008, 2009, so kind of post-global recession. So I've had to dig in a lot over the years. I think what I'm seeing right now, the challenge is twofold for us. One, that we're seeing agents who are worrying about prices potentially dropping, about having difficult conversations with sellers about there not being so many buyers around a lot of hesitancy in the current market. And as you rightly say, agents are trying to protect their own fees and are very, very reluctant to advise on an additional service, albeit that we know, because we've got a lot of data to evidence that we prevent that price drop. But they're reluctant to advise on that because they're scared of their own fees. So that's one challenge that where we're going to market, and it's about 50% of the time that we're actually going to market with a client via an estate agent. About 50% of our leads now come to us directly, which is a big change. So that
how big a change is that? Just have you got has that gone up quite considerably?
In the first couple of years of the business, less than 1% of our leads came to us directly.
Yeah.
So in 2015, when we first measured that particular metric, less than 1% of our leads came to us from a homeowner direct. Now, last year it was 52%.
Wow.
Came directly. And then the second challenge that we're also seeing, of course, as any business right now, is rising costs.
Yeah.
So our furniture is stored in our warehousing and has to be moved from the warehousing into a client's home where we're furnishing. And we're not furnishing in every case. Sometimes we're zhuzhing up using the client's own furniture. But if we are furnishing, then costs are much bigger because fuel's going up. So inevitably, that cost goes up. And then what we will also see, and it happened coming out of COVID as well, is that in 12 months' time, I fully expect furniture costs to double because
That's a biggie.
because transport costs of furniture, a lot of it is manufactured in the Middle East,
it's up the stream, isn't it?
In Asia.
Yeah.
And therefore, their shipping costs are going up. I've just seen now something that we knew on Friday, actually, that one of the UK manufacturers that we've worked with has gone bust. That's now been announced on
they quite
the
an
news
established
just
business?
as I came in here today. And that business has been going for a very long time. I don't know how long in the UK, but maybe 50 years, something.
Wow.
Very well-established long-term business in the UK has just gone bust. So we then, we buy trade furniture, but a lot of it is manufactured or part manufactured in Asia or in Eastern Europe, and all their transport costs are going up. And therefore, the knock-on to that, this time next year, will impact where we're having to buy new stock. At the moment, we've got a lot of stock, but when we have to buy new stock,
Refresh it.
that goes up. So that will be huge.
And do most of your agents work self-employed? Do you have your own teams now? I've seen some personalities on social media with your brand. Are they kind of brand ambassadors for you now?
So for us, we launched a franchise model last year.
Franchising, yeah.
So we have full franchisees in different areas of the country. And thank heavens, but part of the reason for that was to reduce costs of transporting people and furniture from the Midlands, which is where we're based. So that we, when we get a lot of inquiries from the Southwest, for example, then we've now got a franchisee in the Southwest who has a stock of furniture there, who transports from Exeter rather than transporting from Midlands down there. So those costs are reduced. We're significantly upping our recruitment of franchisees now, again, for that reason, so that we've got people on the ground in different areas around the country, so that we can, as far as we possibly can, not have to pass on increased costs to our clients, because nobody's going to want that going forwards. So it's really, it's not straightforward out there right now.
No, this is before marketing
Yeah.
and before client acquisition and running a business and increased business rates and NI and all of the other
which of course was last year's event. Followed by all the kite flag about tax and tax implications, particularly for our premium clients. Normally, a budget wouldn't particularly bother our clients. We would get through that
it's normally
fairly
protected,
easily.
isn't it?
It's normally protected.
But it's not.
But last year, because a lot of the potential tax changes would impact maybe prime residential, inheritance tax, pension pots, which it did, all that kind of thing, then all of that impacts on the prime market. And whilst some of those changes never came to fruition, the anxiety about it really impacted our market last year.
Talk about the prime market and the super prime market. The headlines are as follows, aren't they? Central London house prices have fallen by 40, maybe even 50%. Mm-hmm. What are your thoughts on that?
Nice big open question, that one. Yeah, at peak in London, you do see people, especially from an international, saying London's safe, it's a safe investment. But with all the costs of running a property and selling a property and the tax on that gain, they're just happy to wash their face on the investment and sign off on the rental that they've generated. So yes, property prices are, but saying that, we're seeing the green shots at the top where people are thinking that this is the bottom of the market. And
they're coming in back into the movement
Correct.
Of what's going on. Because that's where the opportunity is, isn't it? Let's be honest, for investors, is downturns.
Yeah, it could be.
It's the bottoming out of things, and obviously historically London or central prime London.
We'll see what happens in a few weeks' time once it's a new tax year and how many of those Middle East and Dubai-based clients start coming back.
Do you think that's a good possibility?
Yes.
Yeah. Do you see that having quite a lasting impact on Dubai?
No.
Because of the way they've handled it, or just...
well, they've had so many problems that they've gone through Dubai, haven't they?
Yeah.
Historically. So I would imagine, I'm going to be optimistic and hopeful that they bounce back again from it.
Yeah, I think they will.
But it's not a lot of people move to Dubai to end their life there. A lot of people are relatively short periods. So, for example, if we get
5 years or something like that.
Yeah, if we get 5 international buyers coming into the UK at the moment, 3 of them are American, and then 1 of them is a returning expat. So if you're interested, some of the stats that we've come across before is 60% of expats return or invest back in the UK within the first 3 years. That's a good one, yeah. And then the last is all over the place, all over the world. But yeah, I would expect a lot of Middle Eastern and Dubai residents who have been concerned around it are just bringing short their time in the country. So people will start seeing them come back, but they probably all respectively used up their tax days in the UK this tax year. So give it another few weeks and you might get a few more inquiries and people returning. Yeah,
just to kind of come into your business sphere, to the viewer, the listener, what your role in Lumen,
So me, I'm basically, the title officially is Key Partner Director. So I basically talk to a lot of partners throughout the UK and wider Europe to support and educate agents around the benefit of asking that simple question that isn't painful. As part of this purchase or your wider finances, are you moving money internationally? That's it. And then everyone finds one.
Can we clip that and then we can just we can then send it to all of our clients, because Steve asks it in a succinct and very slick manner.
It's not too scary, honest, it really isn't. And people will recognise it. The clients are those ones calling out of hours on a number you don't recognise.
Yeah.
Are the Americans, for example.
Yeah.
And they're the more active emotional buyers in the international space at the moment.
What's the biggest challenge for you at the moment in your role, in your business, in terms of kind of meeting the expectations of the company, but also growing in the partnership space?
Partnership space growing is getting in front of more meaningful people. So depending on what number you look at, in the UK, 50,000 active agents, something like that kind of ballpark. The UK property market is so much more fragmented in contrast to Europe. So that's my challenge. So by that, in Europe, we work with some of the biggest brands out there. I've got the phone numbers of people who run the businesses that do 10% plus of a market. So fantastic. Whereas in the UK, depending on what stat you look at, you've got EXP at 1.6%. So there's a lot of people to talk to, a lot of people to try and identify and profile those ones who will learn something new of choice. When was the last time you learned something new of choice rather than necessity? And then understanding those that will have that meaningful conversation.
How do you identify those people, though?
It's how many services are they using at the moment? Are you just going, here's a solicitor that's not as bad as the others? Here's my mortgage broker that I've known for 20 years, and that's it. If that's it, then you're probably not going to be too open to doing something new. Whereas if you're an agent that's got a team of half a dozen services and are doing everything from removal to wealth management and everything else, then this is an easy thing for them to see the value. Yeah, so coming back to that point of an advisor rather than an agent, which you coined earlier.
Yeah, I like advisor. I think it's a very good summary of someone who has the network to support the client's needs. And I think it's a really different take on being an estate agent. And I've been an estate agent, so I'm not knocking it, but I think it can be a very negative connotation to it, unfortunately, because estate agents' reputations tend to come with, they just want to get the deal done fast and get their commission.
Yeah,
which you do, but not at the price of certain other things.
Some of those, I've approached and gone out to top brand agents, and they've been doing the same thing for 30 years and don't want to change. Don't want to rock the boat, don't want to learn anything new, don't want to try anything new. This works. I'm big. I do what I do. No, thank you. I'd much prefer to speak to 10 people that are in the self-employed brokerage model rather than one person who leads a business that's been doing it for 30 years. Because in my experience to date, they've got so many things going on, so many business challenges and problems to do. This is a little thing. Whereas it comes down to that perspective of value. In the same way that an agent speaking to a client, why are you moving? What are you doing? What stage of life were you when you bought this property? And going that extra level to learn that and to stand out and see the value. It's those agents. So if you're listening to us and you are one of those, let me know.
I think it's a really good point, because I think, the call to action actually probably would help in this particular episode, because you both can add massive value to the agent's I suppose toolkit, really, of being able to help their clients. So yeah, 100%. And I think I've really enjoyed listening just a little bit more in depth about what you do today as well.
There's lots more I can talk about. I could go for hours and hours and hours. I'm passionate about this.
Well, I'm going to be here a lot more.
Bringing in. Can I just say something on this advisor bit before we wrap up, Matt? Because I don't actually think it has to any longer be the estate agent that is the advisor in this particular group of services that's being brought. It has to be somebody who is at the front end, who is the first point of contact, perhaps, for the home seller. And whilst historically that was the estate agent, I think the threat to the estate agent is that actually the home sellers contact somebody like us, for example, first. So I said to you earlier, 52% of our inquiries last year came from a homeowner direct.
Yeah,
that's a huge threat to agents.
And that's only going up by the sounds of it.
And that's going up all the time. Because actually, the first thing that happens is that I have in my little black book, estate agents,
bigger than little, I think.
It's huge. It's a whole thing. It's a whole room. But agents all over the country, removals companies, storage companies, Steve,
I think it's a really good point, Elaine.
Conveyancers. I can absolutely, and my team can instantly put people in touch with the right people anywhere in the country. So I think estate agents, some of them are doing this and many of them aren't, but need to understand that they are only necessary for one little bit. And actually, if they're not doing that bit and really making sure that they are a valued person in this group of people that need to be involved in transacting a property, then very quickly they're going to become obsolete, and the next one's going to come, somebody else is going to take that role.
I've got so much more stuff I could say, but I'm conscious that we've talked and gone.
Look, he knows I could go on for ages. That's one of my things. But we should touch on one or two more things. I just want to kind of capture that, because I think that's a really good point. We've got AI as well, right? So, agents have got to be careful they're not being left behind. And I think what you're saying, it really does translate that as an opportunity as well.
A good agent has to be a marketplace for the transaction.
Yeah,
so it has
100%.
to have all the services around it.
Yeah.
And it's just one point of contact.
Correct.
And if they're not doing that well enough, then homeowners will, particularly in the prime space, do you
come on then, like, let's just have a couple of more thoughts.
All right.
Because you've got some pretty major brands which are synonymous to the prime, super prime. Obviously, I'm not going to name who they are, but I think you're probably thinking one or two brands that you may have in mind who have got the global brand. They are out there, they're established, they produce lots of reports and updates in the market and so on and so forth. I sometimes feel like, I don't know whether they're like the Titanic and there's a big iceberg and they're heading straight towards it because of the ability now of someone, let's say I want to be in the super prime market. Most of the information I can pull together, most of the partnerships I can pull together, most of the data I can pull together, if I've got the personality and the drive to go out and learn the market and be the go-to person, why would a client want to go with someone who already knows it all?
This is the argument about the self-employed model. People buy from people, not the brand anymore. There's a bigger gap away from the brand in that I see. I appreciate it's different
Well, I think
in the
brand
area that you're in.
attracts the person
Yeah,
as
I
well.
was going to say,
but
I think
yes,
brands
but
still
fair.
attract.
The brand
Yeah.
is,
Yeah.
unless
Yeah.
the brand is evolving or they're
Stays current.
because it
Yeah.
feels like to our genre in our 30s and 40s,
Speak for yourself.
we and I think some of those brands feel like they maybe attract people in the more mature age bracket. When you look at the new money in the world and the new money needs their way of communicating, and they want that person that can do everything, which I genuinely actually think they do, and I'm with you both on that. If you're not being found, you're in trouble. As in, because the big brand is it can sometimes feel like a big, where do I start, to those people rather than social media. I mean, one of the guys I know, Trevor Kearney, he came out of Savills a while back and started his own private office. He was doing serious amounts on social media. His profile on social media went through the roof. And I can just see that being a huge threat to those big guys and girls. What do you think?
I think, I do think that that's true. I think that if you're going to do that, if you're going to come out of a big brand and set up by yourself, then I think you've got to understand what that's going to take. And you have got to have the backing of the right other people within your network. And you've also got to be prepared to invest in the social media, in the, just in the marketing, the PR, whatever it is, to get your voice out there, because there is a huge amount of noise in that marketplace, exactly as Steve said earlier.
Yeah, there is.
The brand with the biggest number of agents in the country has 1.6% market share. It's tiny. So you really, really, really do have to understand what you're trying to do and understand the investment that it's going to take in order to be able to do it. You can't do it on a shoestring to get out there. So the stakes are quite high, I think, if you're going to do that with no brand behind you at all right now.
Well, it's funny. I was talking to you before we started, and one of the things we're doing is we are, because I had a lot of limited company partnerships, so I'd have Gigs and Eakins for argument's sake, and Gigs and Penhaul, and you're setting up a whole new business, a whole new entity, putting a whole new team of a whole new employed group of people around it, a whole new website, whole new software, whole new this, whole new that, and you kind of, by the time you get to the end of it, you think, well, you got a hell of a lot of overheads to get things. Now, do not get me wrong. For many, many years, that has worked really well. But actually what happens sometimes is you get really great agents, and being a really great business owner is a completely different job to being a really great agent. So we've gone down the route of, and we're going shortly into announcing what we're doing, but it's having more partners. trusted advisors working around us with all of the assets that we've got to be able to use as a platform, and helping them to either be employed or be a hybrid or self-employed partner. And actually starting with a brand behind them, which is recognisable in the locations where we already operate, is quite a good step into it in the first place. So I think your point around that brand and, imagine doing it without that. I think if you actually look at the 7-month mark of those self-employed agents, most of it's because they don't know how to lead gen. They don't know how to put their personality out there, maybe in the right way. They don't really know which market they're looking to serve, so their content doesn't seem to be too precise. There's various different other reasons, but it's quite a lot. The investment, I would say, for most self-employed agents is at least 12 months to really stand a chance. If you've got 12 months of finance to get you off the ground, it's a tough gig.
Yes, it is. Yeah, there's no one shying away from it. It's a tough gig. You've got to invest, plan, define what good looks like, follow that religiously, and say no to more stuff you say yes to.
I like that. Let's end on that. I'm going to say thank you so much for joining me today on Estate Agent Showdown. It's been less of a showdown, which they all seem to be less than a showdown at the moment, because I got some great feedback about just some of the one-to-one conversations that we've been having, because I think the relatability is really key at the moment, and the relevance of where we all sit within this particular market. So thank you, Steve, for not only hosting but being a guest.
Thank you for having me
today. And thank you, Elaine, for coming all the way over from Derbyshire to join us today in London.
Thank you for having me.
Thank you again. And guys, follow these two on social media. Where's the best place to find you both?
At Lemon and Lime Interiors, either Instagram or follow me personally on LinkedIn. That's where I live.
Yeah, Steve Eakins, currency, or if you put Steve Money or something into Instagram, people seem to find me now. I seem to be in most people's phone as Steve Money or Steve Currency. But yeah, check me out on Instagram.
You've been amazing. Thank you so much. Thanks for watching. Thanks for listening. And I'll see you on the next show.